Hi guys, welcome to another daily market forex analysis. Let's get started on the DXY. If you'll have a look at my previous video, you'll see I've already marked the charts for the week. If you start on the weekly time frame, you can see I've trapped the price between a support level here and a resistance. Then went into the daily time frame, you can see there's a daily support here. This high, low that was made. Price then made a lower high. This is the daily resistance. So you can see price tapped this region, went back down, it's formed a double top, and today it's a bearish candlestick on the daily, so indicates DXY is going down. So it could either go down to this region here this week, or it could even go down further all the way to the daily support again, but we'll have to wait and see. Anyway, the daily candle is bearish. Go with the H4 time frame. You can see this H4 level here, the zone in yellow. It approached it yesterday and it's gone back down. It's now bearish because it's broken the previous high or low. So it looks to be going down to this H4 support region here. So that's how we can identify the direction of DXY. So in this case, because DXY is going down, we can expect the USD pairs to be going up. So we're expecting buy trades on the USD pairs. Now let's have a look at the Euro GBP beforehand. For the daily time frame, you can see that the candlestick today is green, so it indicates that we're buying today on the daily. If we look at the H4 time frame, we want to trap the price between a support and resistance level. We can see here there was a previous high low formed where it makes a support, and here is your resistance where prices fail to breach further, and you can see it's tapped it 1, 2, 3, 4, 5 times and it's gone down. So that is your H4 support and resistance. We can expect price to move between these levels on the H4 time frame. If we then break the price down further on H1, what I need to do is get the Fibonacci retracement tool, which is this one here. Get a look at the previous day. So today is a Wednesday. If we look at the previous price action, get it from the high of the day, which is this point here, to the low of the day, which is this point here. That would be your intraday trading levels before the market opened, before 8 o'clock this morning. So as you can see, prices are respected these levels. You can see 7 o'clock in the morning, just before London session open at 8 o'clock, massive bullish candlestick. Price looks to be at the 78.6. So you can see here there's already rejection of buyers to push the price up. Sellers have pushed the price down previously. Sellers are pushing the price down here again. So here you can be a point of reaction. There could also be a support level here as well, which indicates that price is going to go down from here. As you can see, the current H1 candlestick is bearish engulfing. It has engulfed the previous candlestick. It does indicate sellers are now into the market. So price can expect to go down on Euro GBP. So let's just say if you are interested in a sell trade, because price is close to the level. It is at 78.6. We can see previously it rejected this level. You know I've got a bearish candlestick, so those are 3 factors which indicate that is a good opportunity to sell. Let's say if I get my risk and reward management tool and I enter a trade here, my stop loss would be just above the high low. Your TP would be this region here. You're risking 7 pips to win 11 pips. It's not a great risk to reward ratio, but it's 1.5. You can then go to the M15 time frame. You can see prices making a lower high. It could actually retrace all the way back. So till it retraces back here, I'm not going to enter a trade just to improve my risk to reward ratio. So you can see now I'm risking 3 pips to win 17. My risk to reward ratio is 4.72. So I'm going to wait for it to pull back because I'm not happy with the current price action. I should have entered here. There's no point me entering here because it's in the middle of the 2 levels. Not only that, price can retrace further back and then go down. So I want to improve my risk to reward ratio always. So that's my risk to reward management tool. Let's hope that we get a pullback before I can enter a trade down. That's a setup for Euro GBP today. Let's look at Euro USD. So remember guys, I said on the DXY we're expecting price to go down, which means on the USD we're expecting price to go up. So if we look at the daily time frame, daily made a support. Price at a daily support, sorry. If you look at H4, let me just update the levels. So you got H4 resistance. This was a previous H4 resistance. We can move this one to H4 resistance because it's the next lower high. And the lower low would be here. So there's the H4 levels. So we can expect price to go from this level to this level here on a H4 time frame. Now obviously we want to break it down further. So if we go to the H1 time frame, get the Fibonacci retracement tool, which is this one here. Get it from the previous day's price action. So Tuesday's the high of the day, which is here, to the low of the day. These are your intraday trading levels before the market opened. Guys, I'm literally repeating myself every chart, every day, every breakdown. I'm literally repeating myself again and again. These are the levels before London session opened. Prices changed direction. So let's just say we want to change the Fibonacci tool, so it would be from here to here. If price breaches this resistance, we can expect it to breach it, form a higher low, and then go to this either minus 23 or minus 61. So because DXY is bearish, we're expecting price to breach this resistance. Once it makes a higher low, we would enter a buy trade, and this would be our risk to reward ratio. Risking 5 pips to win 16. A risk to reward ratio of 3. We'll have to wait and see. It's price currently at resistance. It could retest it and go down as well. We don't know. Obviously, we'll have to. DXY is positively correlated with the Euro USD, so we'll have to see how it plays out. But I am expecting a buy trade today on Euro USD. So let's just wait and see how that one plays out. So that is my trade setup for today. I'm just going to leave it like that, and when I see a high low, I will then enter a trade. So if we go to GBP USD, price is currently at a potential daily support. Well, this could be a daily support as well. If we go to H4 time frame, price is at H4 support level. This would be your H4 resistance. If we go to the H1 time frame, similar price action to Euro USD. Before London session open, these would have been your levels, like so. Price has now changed direction, so let's use these Fibonacci tool retracement now. So if price breaches the resistance, this would be my trade setup. Even now you could take a trade setup because it's retraced, it's made a high low, high low, it's retraced to the 50% fib. If you want to take a buy trade, you could potentially do so now, but it's risky. That could be TP1, that would be TP2, that would be TP3, and then your stop loss would be just above, underneath the high low. If we look at the Euro USD card, daily is bearish because it's at daily resistance, so it's going down from here. If we go to the H4, see there's a H4 resistance here and a H4 support here, this level here where it's made a higher low, higher high. If we go to the H1 time frame, the low of the day to the high, which would be here to there. These will be your intraday levels before the market opened. Would have been a change of market structure at this point here. So I would have took a sell trade. I think I've missed it now. on this candlestick here, which was at 6 o'clock this morning, just before London session opened. Could have entered a trade, 11 pip stop loss, 41 pip win. As you can see, USD CAD is going down from here. I missed it. I could potentially enter it now, but it's risky because it could reverse as well. And if we look at EJ, daily is bearish, so sell trades. H4, this would be a new H4 level here. It's made it. This would be your resistance. H1, high of the day to the low. This is your levels for today. Daily has made a new, so you could put the daily here now. Daily new low. So yeah, as you can see, it's in a downtrend till we see saying change of structure, change of market structure. So it could potentially change right now. Let's just say I've put this here where it's gone above the previous bearish candlestick. If we go to M15, you can see price has now changed structure. What do I mean by that? I mean that by price was in a downtrend, lower high, lower low, lower high, lower high, lower low, lower high. It's made a higher low, high high, higher low, higher high, higher low. Because it's breached this previous candlestick, it's changed the direction. So I'm actually going to enter a buy trade right now. I feel as though this is a good entry. It's tested it twice, double bottom on an M15 time frame, and I'm going to go for it. Let's see how that plays out. Cool, that is entered. Let's see how it plays out. Obviously the candle is bearish, but it's an inverted hammer. Well, a hammerhead indicates sellers are trying to push the price down, buyers are pushing the price up. You can see there's a daily, well, M15 support potentially, and I've entered a trade because I feel as though it is going up. Change of structure on an M15, and boom, I've entered. So that is my only trade that I've taken right now live. There was another trade that I was interested in. I think it was this GBP USD one, but we'll have to look at the DXY. If DXY continues to go down, which it is looking to do so, then we can enter a buy trade on either Euro USD or GBP USD. Let's say GBP USD is a better trade because EJ is going down, EG, Euro GBP. If Euro GBP is going down, that means Euro is going down and GBP is going up. So I'd say this is a potentially good trade to take as well, potentially, but not right now. So we'll have to wait and see, guys. But yeah, I hope you enjoyed that session. Like, share and subscribe. Peace.